Yes. One of you quickly tell me what is cash flow statement? Yes. Atul, your voice is breaking. Who will tell me? Should I call out the name? Yeah, say.
It shows the movement of cash inflows, all the outflows.
Ah, very good. Cash flow statement is actually a tool for financial analysis. Okay. In that statement, we will be showing the cash inflows and cash outflows. Okay. Now tell me, which is the accounting standard related to cash flow statement? Yes. Irfan, tell me the
Standard
accounting
3.
standard.
3.
Accounting standard 3. Only like that? Do you want to add something to it?
Revised.
Very good. Yes, Andrew. Revised. Accounting standard 3. In the bracket, you'll write revised. Okay. So, cash flow statement is related to cash inflows and outflows. For that, what is the first thing we do? We will classify all the activities into how many, Tomlin?
Ma'am, 3.
3. Which are they?
Financing.
You will begin with financing?
No, operating.
Operating,
Financing.
financing.
Investing.
No, after operating, again financing. After operating, then what will you show?
Ma'am, financing.
Financing. This Shubham is telling me investigating. Did I teach you any activity like investigating? Investigating. I'll give you imposition now. What is it? Aparna, what is it?
Ma'am, operating, investing, and financing.
Investing. It is not investigating. You go for CBI for investigating. Okay, investing. Then what is the third one?
Ma'am, financing.
Financing. Okay, okay. So operating activity, investing activity, investing, and financing activity. Okay. So, and we discussed the adjustments also related to it, right? Did I tell you the adjustment related to asset? Did I tell you that? Preparation of asset account. Yes or no? Yes, Karthik?
No, ma'am. Only
No.
2
Okay,
adjustments.
okay. Then I'll say that first. Which was the first adjustment? Yes, which was the first adjustment?
Relating to SPR.
That is reserves. First adjustment was related to reserves. What was that adjustment? What did I tell you?
If there's
Reserves.
increase or decrease in balance sheet in SPR, then
Yeah.
we should add or
Yes,
less in
correct.
financing
All
activity.
the reserves, whatever reserves you see, that reserves you will take it for the calculation of net profit before tax and extraordinary items. Okay? Only SPR. What is SPR?
Securities premium reserve.
Securities premium reserve. Very good. And only this SPR you will take it in which activity?
Financing.
financing. So if it is increase in SPR, you will add it to the financing activity. And if it is decrease, you will reduce it from financing activity. Okay. Then the next adjustment was related to, what was that? Yes, Femina, what was it?
Provision for tax.
Provision for tax. Okay. I told you how to prepare provision for tax account. Correct? Provision for tax. Where do we show the opening balance? Where do you show the opening balance?
Credit side.
Credit side. Okay. Opening balance BD. You will show it on the credit side. Then closing balance CD. That you will be showing it in the debit side. Then provision for tax account. Okay. Balance board down comes here, and balance carried down will be shown on the debit side. Then what do you see on the debit side again? What is that item? Tax paid. Tax paid during the year. That will come here. Okay? Tax paid during the year. And the figure on the credit side is provision for tax made during this year. Okay? Made during this year. So based on the data available in the question, you have to prepare the account and find out the figures. BD and CD will be given. Okay? Then sometimes tax paid will be given to you. So the balancing figure will be this one. Okay? Or if this is given, whatever balancing figure you get, that will be tax paid during the year. Is it clear? And tax paid during the year. In which activity do we include it? We have to reduce it. Okay? Reduce it. Minus it in the operating activity. Tax paid during the year minus from operating activity. Okay? Then provision for tax made during this year. Where do we show this? After preparing the account, you get the figures. Okay? And this figure, we will add back in the working note for the calculation of profit before tax and extraordinary items. Okay? Okay. Now, next important adjustment. Please listen, everyone. Next important adjustment is related to assets. Okay? Asset account. Regarding the asset, we have an adjustment. Okay? So some details will be given regarding the asset in the question. Based on the details, we have to prepare an asset account. Assets can be machinery, furniture, land and building, anything. So, regarding the asset, you have to prepare asset account. Now, let us see how to prepare asset account. Asset account. Where is the balance BD and CD? Yes. Where do you show the opening balance and closing balance? Credit side. This Shubham is giving me an answer. Let me listen. What is it? Credit side. What balance you show on the credit side? Next imposition. Yes, tell me. Where do you show the balancing, opening balance for asset account? Tomlin.
Ma'am, I don't know, ma'am.
What is the nature of asset account? Well, asset account, asset. It is asset. Hmm? It is asset. So what balance will asset have? Karthik?
Debit balance.
Debit balance. Okay, debit balance. Asset will always show debit balance. So where is the balancing figure? Opening balance, not balancing figure, sorry, opening balance. Balance board down will be shown on the debit side. So the closing balance will be balance CD will come in the credit side. Okay. Please take down, please note this. When you open an asset account, the first thing you have to show is the opening balance and closing balance. Opening balance means the previous year balance in the balance sheet. And closing balance is the current year balance in the balance sheet. Okay, so balance board down is shown on the debit side, balance carry down is shown on the credit side. Okay, then listen to me. If an asset is sold, okay, sale of an asset is sold. So what is the journal entry? Asset is sold. Asset is sold. Yeah, what is the journal entry? Switch on the videos, please. Asset is sold. What is the entry? Asset is sold. When you sell something, what comes inside? What comes to the business? Yes, Aparna. What comes?
Ma'am, cash.
Cash comes. What goes out? You are selling an asset. So what is going out? Asset is going out. You are selling an asset. So asset is sold. And what comes in? Cash comes in. So what is the journal entry?
Cash account debtor to asset.
Very good. Cash account debtor to asset. So when asset is sold, how will you show it in the asset account? Cash account debtor to asset. Cash or bank. Okay, cash or bank. So we will write by bank. Cash or bank. By bank account, write the amount. So this by bank shows sale of asset. Sale of asset. Okay? Sale of asset. Then, listen to my next question. If there is any loss, okay? You incurred loss on sale of asset. Where do you show that? Loss on sale of asset. You sold an asset lesser than its value. So there you will have to incur loss. Loss on sale of asset. Loss on sale of asset, we usually debit it in the P&L account. Correct? P&L account, we will debit it. You remember? Okay. So that loss on sale of asset, you have to write it on the credit side of asset account by P&L account. That is loss on sale of asset. Okay. And if it is profit, then where do you show profit on sale of asset? Profit or gain. That also we will be crediting in the P&L account. So in the asset account, we will show it on the debit side to P&L. To P&L account, gain on sale of asset. Gain on sale of asset. Okay. Then the next item is most important one related to asset, depreciation. What is depreciation? What is depreciation?
Decrease in value of assets.
Decrease in the value of asset. A loss of value, loss of an asset. It is a loss. Okay, decrease in the value of asset. So depreciation, we have to show it on the credit side by depreciation. By depreciation. Okay, by depreciation, you will write it on the credit side. Depreciation, what is the entry? Depreciation account debtor to asset account. Depreciation is a loss. Loss increase, you debit. Value of asset decrease, you credit. Okay. So these many are the items that appear on the credit side of asset account. By bank account, sale of asset. By P&L account, loss on sale of asset. By depreciation, that amount and balance CD. Okay, with this, we will solve it. We will balance this account, and balancing figure, you will get it on the debit side. That is to bank. And it would be purchase of an asset. Purchase of asset. Okay, we'll do the problem. Then you will understand better. Sometimes purchase will be given and P&L, loss on sale, depreciation, all that is given. Then the balancing figure will be the sale of asset. Okay. So based on the available information, you have to prepare asset account. When you prepare it, these many are the transactions. And this is how you have to record it in the debit side as well as credit side. Okay, is it clear? Asset account, debit side and credit side. On the credit side by bank, that is sale of asset. Then by P&L account, that is the loss on sale of asset. By depreciation, then balance carry down, the closing balance. On the debit side, balance brought down. Then gain on sale of asset, again it is P&L account. To bank, purchase of asset. Okay? Is it clear? Okay.
Yes, ma'am.
Yes. So now sometimes the business will be maintaining provision for depreciation. Okay. This is an account. This asset account, you have to prepare it in this way when no provision for depreciation account is maintained. Okay. Sometimes the business will be maintaining provision for depreciation. Okay. Provision for depreciation means what? From the profit, they will set aside some amount as provision to meet the loss related to depreciation, to compensate the loss of depreciation. They might have opened or maintaining a provision for depreciation account. Okay, if provision is also there, then how will you prepare it, or what is the change? Okay, so the change is, again, we have to open provision for depreciation account, debit side, credit side. It is provision. So, so where is the balance brought down and CD? Opening balance, where will you show it? For provision for depreciation always have credit balance. So the opening balance, the balance BD, you will show it on the credit side. So where is balance carried down? Balance CD will be on the debit side. Okay. Now, the depreciation, okay, the current year depreciation, you have to credit it here by depreciation. Okay, if provision for depreciation is maintained, then the depreciation for current year, CY, current year, is shown in provision for depreciation, not in the asset account. That is the change. Okay. Earlier, when you prepared the asset account, and during that time, I told you provision for depreciation is not maintained. That's why we have credited this depreciation there. Okay. If provision for depreciation account is maintained, then the depreciation, you will show it in the provision for depreciation account, not in the asset account. So, see, here you had written an depreciation in the asset account. Cut this. Okay. And what should we write there? Instead of depreciation, you have to write provision for depreciation. Provision for depreciation account. Instead of depreciation, that word, you have to write provision for depreciation account. Okay. And also in the provision for depreciation, here also you have to show asset account. Is it clear?
Ma'am, can you explain once more?
Who's that, Anjo?
No, ma'am, Karthik.
Explain it again. That's what you said, correct?
Yes,
did you
ma'am,
say?
that provision
Okay.
for depreciation and depreciation.
Okay. See, if the business is not maintaining provision for depreciation account, okay, then you will prepare only the asset account. Okay, so this is how the asset account will be. You will write by depreciation. Bank account, P&L account, depreciation, balance CD. This is how the credit side of asset account looks. Okay. Now, if the businesses maintain provision for depreciation account, okay, then you will have to prepare provision for depreciation account also. Okay, also show the balance BD and CD. Then the change here is, earlier we wrote depreciation. Instead of this depreciation, you will write provision for depreciation. Because depreciation is a loss and the business is maintaining a provision to meet it, to compensate it. Okay, so we have opened provision for depreciation. Depreciation we have credited in provision for depreciation account. And we are using money from it to write off this asset, to depreciate it. So the change is, in the asset account, instead of depreciation, you should use the word provision for depreciation account. Understood?
Okay, ma'am.
And now see, this was an asset account, correct? This is asset account, and provision for depreciation account debit to asset. That is how the journal entry comes, correct? So this asset, you should show it in the provision for depreciation also. Provision for depreciation account debit to asset. So provision for depreciation account is debited with asset account. Understood?
Yes, ma'am.
Yes. So this is an important adjustment. We will be seeing this in the upcoming questions. Clear? Anybody else? Any other doubts related to asset? Anila, is it clear?
Yes, ma'am.
Okay. So shall we do problem 11:10 to 11:50? No, we have 10 more minutes. And okay. Then prepaid expense. What is that? What account is it? What is the nature of prepaid expense? Is it an asset, liability? What is it?
Asset.
It is an asset. Prepaid expense is an asset. Okay. Then trade creditors decrease. Okay, trade creditors, it is creditors, it is liability. Outstanding expense, what is that?
Liability.
Liability. Outstanding expense, operating expense included, depreciation. Depreciation is also given. So these many details are given to you. Now, what are you asked to find out? Compute net cash provided by operations. Okay, so cash flow from operating activity. We have to find out cash flow from operating activity by using indirect method. Okay, so how will you solve it? Cash flow from operating activity. Those who haven't done it, please do it. Cash flow from operating activity. From where do we start? What is the first item to start with it? Like, we will start with net profit. Where is net profit? You can see that in the statement of P&L. Profit before tax, 1,50,000. So cash flow from operating activity, the first item, or we start with net profit before tax and extraordinary items. Okay, so we are going to start with this figure, 1,50,000. Okay. So net profit before tax and extraordinary items. Then we need to add back. What do you need to add? Add non-cash and non-operating items. So, non-cash item, depreciation is a non-cash item. In this particular question, we have only depreciation to add back. So, we will add back depreciation 25,000. So, the result you get, what is that? Operating profit before working capital changes. Operating profit before working capital changes. So 1,50,000 plus 25,000, you get 1,75,000. Then we have to adjust the working capital changes. The result we got is operating profit before working capital changes. Now we are going to adjust the working capital. So what is to be added? What is to be added? Yes, Anjo. What will you add? Yes, Tom. What was that? Increase in? What will you add?
Current liability.
Increase in current liability and decrease in current asset, you have to add it. Then decrease in current liability and increase in current asset, you have to reduce it. So that details are given to you in the adjustments. Okay, adjustments. So accordingly, you have to reduce it or add it. Time is up, right? Okay, we'll continue in the next class. Okay. Thank you all. Join on time. Thank you.
Thank you, ma'am.
Thank you, ma'am.
Thank you.